Exercise 12-4, Evaluating a Special Order. So this company has a request for a special order of 10 gold bangles. The normal selling price, $389.95. The costs are given here. Most of the manufacturing overhead is fixed and unaffected by variations in how much jewelry is produced. However, $7 of the overhead is variable depending on the number of bangles produced. The customer would like a special filigree applied to the bangles that would require additional materials of $6 per bangle and would also require acquisition of a special tool that costs $465. It would have no other use once the special order was completed. The order would have no effect on the company's regular sales, and the order could be filled using the company's existing capacity without affecting any other order. Okay, so now we have to determine which amounts here are going to be relevant to our decision. So you can sell for $389.95 per bangle. Direct materials, that is going to be relevant. If we make it, we will incur it per unit. If we don't, we won't incur it. Same thing with direct labor. Manufacturing overhead, it said most of it is fixed, but $7 of it is variable. So of this 35, only 7 is going to come into play in our decision. It's going to require additional materials of $6 per bangle. So that's another variable cost that we have to take into account. And a special tool that costs $465, but it has no other use afterwards. And then that's the only ones. So now if we go look at the solution, again, when you're doing them yourself, format them in this same way, per unit, and then the total per the number of items that were given. So incremental revenue, $349.95. They can sell each bangle for that price. The direct materials, the total amount of direct labor, and then for variable, for the manufacturing overhead, the variable amount was 7. So that comes into play in our decision. And the additional $6 for this special filigree. So our total variable costs that would be different if we went ahead and did this special order is $242. Here all we're doing is multiplying it by 10 because the order was for 10 bangles. We would also have to purchase a special tool that has no other use after this is done, so the whole $465 then gets applied to this job. That's a fixed cost. So now if we take our incremental revenue less our variable costs less the fixed costs, our total incremental cost is $2,885, which leaves us with an incremental operating income of $614.50. So therefore, the company would make money off this special order, given the fact that the space wouldn't be used otherwise.